I don't invest in stocks and shares, but I love property, commercial property especially, but I've got residential property too. When you start out as an entrepreneur, you're not really an entrepreneur, you're usually a solopreneur or one-man band making it happen. Then you build your business up and you invest some of your profits into employing people. Hey, you're an entrepreneur. The next stage is becoming an investorpreneur, where you take your profits and start investing it into other things. Now for me, that's been property, the compounding effect of investing those fast pounds, your cash flow, into slow pound building assets. But there's another thing that you can do. It doesn't have to be property. There are funds and stocks and shares, and there's plenty of people that have done this super successfully. People like Warren Buffett. Now, I don't really understand stocks and shares. I've researched it a little bit, and I've never wanted to put my cash into it. I've always been much more attracted to property. Now, on this video, I brought on a guy called Ramin. Now, Ramin worked for one of the world's largest private banks. If you Google private banks, 10 will come up. He's one of those. He went off on his own and he started investing his own cash, and he created a YouTube channel teaching people about all this stuff. So I decided to confront him, to interrogate him, to try and get him to change my mind. Should I start investing some of my cash into stocks and shares, or should I stick with what I know and love, which is property? Can he change my mind? Let's find out in this video. If I had £1,000 to invest, what would you do with that £1,000 to get the best return?
The main thing is to realize that you're investing over the long term. And if you're investing over the long term and you look back historically to see what each of the investments you could have put your money into would have given you, global equity would have probably come out as one of the top investments.
What do you mean by global equity? Just assume that people don't understand this stuff.
You open up a brokerage account.
Where would you go to do that?
The cheapest possible platform, because...
And who's that at the moment?
Probably depends on how much you invest, but Vanguard's one of the cheapest. So there you'll just pay about 0.15% of the invested amount every year, and it's capped at 375 quid. So the more you invest, there'll be a certain point at which you hit the 375 cap.
So if you invest £1 million through Vanguard, the most you'll pay is 375.
There are basically two choices you've got when you invest. You can either buy a whole market, so you could buy the whole S&P 500, which is the whole US market, with a single fund, where the fund manager will just go out and buy stocks in proportion to their weighting in the index. So it's literally like you'd gone out, split your money amongst all the 500 stocks and invested according to the biggest stocks. So if you see the S&P's gone up 1% in a day, so will your portfolio. You're just tracking, and tracking is simple and it's cheap. And you can do that for a fee of about 0.05%.
What goes around in my head, remembering that most people watch my stuff are business owners and entrepreneurs, is it smarter for me to carry on investing in my business, or is it smarter for me to do what you're doing? And I lean towards, well, I'm an entrepreneur and I probably have skill sets and a risk appetite higher than most.
But I speak to quite a lot of business owners who are at the other end of this journey, which is they've had a successful company, they've sold it for a very substantial gain. They're really stressed because they're sitting on a large amount of cash, like you say. They're worried about how to invest it, such that they'll have wealth for their children and for their grandchildren, and they won't lose it. So they see themselves almost like an owner of a stately home, right?
Yes.
The one thing you've got to not do is lose the stately home. And it's good to be paranoid at that point, because keeping your money is not easy. And taking too much risk is a problem that people usually have if they've been successful, because success is a very poor teacher. People assume that if you've been successful in markets, it's because you're a genius, they get too confident, they take too much risk, and they lose a lot.
Let's go on to this now. Let's talk about real estate. You've got £1 million, you're going to put it into real estate or what you do. What I mean is, have you done buy-to-let property, bought a flat and rented it out?
No.
Never done that.
And I never would, I don't think.
Why?
Because there are a number of problems with it. So firstly, you have to put a large amount of capital into it.
Deposit.
It's very illiquid and the transaction costs are very high, and the capital gain is usually quite low compared to equity markets over the long term. So if I wanted to sell my buy-to-let, it could take months. If it's a distressed market, it could take longer. It's very expensive in terms of solicitors' fees and transaction costs. So you could end up paying a fair old percentage. So illiquid, expensive to trade, capital gains not amazing compared to equity. So why would I trade my equity, which is liquid, costs almost nothing to trade, and has a higher capital return, for something which is less liquid, costs more to trade, and has lower return?
Let me suppose a little story to you. So I bought a commercial property in 2011, might have been 12 actually. It's a small commercial property. I paid £170,000 for it. Rent I get back each year is £32,000. I had it valued by Savills at £390,000 last year. So I bought it in 2012. What are we now? 8 years on, aren't we? Something like that. Doubled in value more or less. Why more? And I've had 30,000-ish, between 25 and £30,000 per year. With that property, because I've got a trading business, I can give that to the bank and give that security to get a loan to grow my business, to maybe buy another business and increase my income streams. In your head, with that little scenario that I spoke about, I've had very good cash flow returns.
Yep.
I've had lower stamp duty. There's no stamp duty on the first 150,000 in the UK on commercial property. Get the tax benefits, capital allowances as well. I agree with you, by the way, on residential investments. I'm not very keen on that. But on commercial property that I just spoke about there, as I spoke to you about that, what was you thinking? I'd love to know.
No, I was thinking, well, if you'd have put it into the S&P,
Yeah.
which is the S&P index in the US, that's on average giving you about 11 or 12% every year for the last decade. So you could have probably got comparable gains in the equity market over that period. The other thing I'm thinking is, I speak to people who had bad experiences with leveraged investments in property. So for example, Hong Kong, I spoke to someone who'd invested a large amount leveraged in Hong Kong property, and then had the bank turn around and say, we're going to ask for more collateral. He couldn't post it. He actually had negative equity and he was financially ruined. In an equity market, you can only lose as much as you put in. With property, in theory, you could actually lose more than you've put in.
Yeah, I've heard those stories, Ramin, and I always make sure that I've got plenty of trading business.
That's great.
What is your view on trading business, being an entrepreneur, being a business? Obviously, anyone can just quickly Google, and I'll tell you the facts in the UK. 50% of businesses don't make it past 2 years, 80% don't make it past 5 years, 95% don't make it past 10 years of trading. So when you look at that, why would you do it?
Yeah.
Because the facts are the facts. And that's just the UK. And I know across the pond in the US, there's very similar statistics. But if you do make it and you learn and know what you're doing, you can make brilliant returns and tax efficient returns on building and buying and selling a business, can't you? Especially here in the UK, you get entrepreneurs relief on the first £1 million of 10%, and then it's 20% for anything else after that. What's your views on building a business?
If you can, do it, because it's fun. I mean, I've just started mine really just 4 years ago, and it's been great. I've enjoyed it. And finally, I'm building something which I can directly benefit from. Over the years, I made many other people rich, but it's nice to finally build a business where, not necessarily to make me rich, but certainly to make me comfortable, and I get the benefits of what I do.
Ramin, would you ever employ anyone?
Yeah, in fact, we're thinking about that right now. So that's
you're going to turn PensionCraft into you're on the journey now from solopreneur straight into entrepreneur. That's what as soon as you employ someone, the risk level goes up, doesn't it?
But the risk for us would be fairly limited because our overheads are almost zero. We certainly wouldn't grow at a rate that wasn't organic. But we don't need investment. We have had some of our customers say, can we invest in your company? So we have had the offer of capital, but at this point, I just don't want to go down that route.
Just before we go into this Ramin conversation just a little bit further, I want to say a big thank you to Capital on Tap. They're sponsoring this video. They provide business credit cards for businesses, obviously, and they can give you up to £100,000 worth of interest-free credit for 56 days. Now, what's really good about this, you can use Capital on Tap to do all your spending on in your business, like I do in my company, and help yourself to up to 1% cashback or Avios points, which you can spend on air miles, etc., etc. They're really good people. If you're interested on getting a Capital on Tap card, then just email my team info@jamessinclair.net, and then they will send you a link on how you can get onto Capital on Tap, plus get £100 worth of free cash just for signing up, as long as you're eligible, or you can use the link in the video description. Right, let's get back to Ramin. How much do I need to invest to help myself to £100,000 a year from my portfolio within 10 years? Because I think everyone's got this sort of magic, £100,000 a year, that's a good salary, I can do what I want. Well, how much do I need to be putting aside each month to have £100,000 a year?
Well, at the moment, because yields are low, there are very few investments which give you a reasonable percentage income. So if at the moment yields are at roughly 5%, they're fairly safe investments. So to get 100,000, you'd have to multiply by 20 because 5% is the 20th. So you'd need to invest about 2 million to get 100,000 a year from your 5%. But I think that's the wrong way to think about it. You should be thinking.
What is the correct way to think
So
about it?
the correct way to think about it is to have total return in mind. So what you care about isn't just income, it's capital growth. Because the two ways you make money, you invest, you buy low, you sell high. So that's capital gain. And the other way is through returns from income. Now, as a property investor, you get both, right?
Yes.
You get the income, you get the capital gain, hopefully. But the income is a reliable part, and then the capital gain is just really sweet extra if you get it. So let's imagine you and I were running a company to make ice cream, which you do. At the end of the year, we've got $1 million in profit.
Yep.
We can do various things with it. We can pay it to our shareholders as dividend. We can reinvest it back into the company.
Yes.
And if it's a growing company, we can grow our earnings. And if we do that, we give capital growth back to our investors because our share price will increase if we manage to invest it profitably. Or we can maybe buy another company and instead of organic growth, we'll do it through acquisition.
Yes.
But for the same reason, which is we get bigger earnings that way. So we buy another ice cream company so we could sell more ice cream, generate higher profits and give more money back to our shareholders. But either way, whether we give the money back to our shareholders as dividend or as capital growth, they benefit either way. And if we're milking our company dry by taking all of our profits and giving it to our shareholders as dividends, then our capital growth will be smaller. So you can't,
It's a very good way of looking at it.
You can't have both. You can't have the capital gain and the dividends. And because stocks are so liquid, you can literally sell it in seconds. You don't care whether you have to sell a bit of this fund in order to get the money back or whether you're just taking it as cash.
Yeah.
So I think dividend investing is the wrong way to look at it. You should be thinking about total return.
Ramin, it's been a fascinating conversation for me. Now, if people want to get you to help them to invest, what's your YouTube channel, your 100,000 subscribers? Let's dwell them up to 200,000 as quick as we can.
So it's PensionCraft. So just look on YouTube for PensionCraft and we've got a membership too.
Yeah. So there you go. What do you think of Ramin? I think he's a thoroughly nice chap. Do you agree with what he's saying? Hit it in the comments below so we can get a conversation going. I want to know, do you think that you should do this, or are you like me sticking to business and property? Or are you actually like me and having your mind slightly swayed? I actually emailed my private banker at the weekend just saying, hey, I'd like to set up a stocks and shares ISA so I can put £20,000 in and benefit from tax-free gains forever the money's in there, because I do like the sound of that. So I am going to just do a little bit of this. I'll always be mainly business, entrepreneurship and property. I do think you should consider this stocks and shares ISA because it's that tax wrapper that makes it so advantageous. See you in the next video. Make sure you like, subscribe and do all that good stuff. Ta-ra.